Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing Catalin Kilofliski, the CEO of Canagold Resources. The company trades on the TSX under the symbol CCM and on the OTC under the symbol CRCUF. We recently initiated coverage on Canagold with a buy rating and a $1.20 per share target price, and it's been a great success over the last week or so with the stock doing quite well. Catalin, great to have you here today.
Great to talk to you, Ben, and it's a pleasure to provide an update to investors. And for those that are not new to the story, an update, and for those that are new to the story, just tell them a little bit more about Canagold.
Yeah, exactly. So with that, for the investors that haven't heard the story before, haven't seen our initiation report, maybe you can sort of set the stage with a quick 2 to 3 minute overview of Canagold and where we are today, and then I'll get into some questions and dive into some more minute or interesting details that we can chat about today.
Absolutely, pleasure to do that. So again, Canagold, it's a TSX main board listed company. So we're not on venture exchange, we're on the big main board, which is very important because it allows us to get into a much bigger um, league, I guess, from both from a corporate governance perspective and also from a growth perspective. And I think if you look at Canagold today, we have the best of what's cool these days in the markets. High grade gold, literally, we would like to see that we would like to say that we are one of the world highest grade gold mines that's coming online, and I think your research kind of proves that. It's good to see the validation, and also critical metals, which is in our case antimony. So, and again, when you look at antimony grade combined with the gold grade, we also make the claim that we're one of the highest grade gold antimony mines in the world. So it's very good. I'm very fortunate to have such a high quality project. The project is quite well advanced right now. We published a full bankable feasibility study on the project last July. Uh, Outstanding economics. Then they were done really at much lower gold prices than today. The base case we had used then, it was $2,500 gold and was showing fantastic economics. And when using 3,300, we're talking about $1 billion free cash flow and really cool numbers, really solid economics. You could probably do your own math to believe that today's prices and it'll be even more spectacular. But I think fundamentally, why Canagold is an underlooked story. There is a reason for that. Um, Under the Canagold ownership, basically, the project that we are developing now and aiming to put in production, company had it for over 30 years. And it's really only in the last 3.5 years that everything has changed with the company. What I mean by that, since about 3.5 years ago, we have a very solid shareholder which is $1 billion group called Sun Valley Investments. They have poured money into the company in the last 3.5 years to complete the feasibility and advance the permitting. And everything has been changed within the company, the board, management, everything is new. Now, because the story was lingering for 25 years before that, people lost confidence and, wow, this is never going to get done. Well, I think by the things we've been able to achieve, we're proving that it is indeed a fantastic asset. And this is for these reasons that, in the recent days and months, we're seeing a lot of interest picking up because this is one of the few underlooked stories in a hot gold environment, which still has room to grow from an evaluation perspective. So we are very happy to see that. So not only we have, a very high quality asset, but we have a very solid shareholder base. Somebody owning 50% of the company thereabouts and having the ability to fund our development and our advancement, it's unique because regardless where the metal price would be, regardless where you can raise capital or not, somebody has the means to advance. And we're not at the mercy of doing any random financings, which
Mhm.
you know a lot of juniors are doing because it's how you do it. But then you get all the stock back, and it's always going to be a sell, right? In our case, we have a very tight shareholder structure and relatively small float, which allows decent share appreciation when interest is there. So again, very unique project. The project is located in Northwest British Columbia. It's a remote site, so there's no power and no infrastructure there. There's no roads to be built. But the reason why the economics are outstanding because we're such a high grade. So in other words, we have the grade to pay for the additional cost of operating in a relatively remote place. This is at the current state of the feasibility study, we are talking about, just under 1 million ounces of gold that go through a mine plan of about 9 years currently. Average mine grade about 10 grams per ton, roughly, fully diluted, which is outstanding. And then this deposit is wide open at depth and in various directions. The reasons why we've chosen to do a feasibility study on the current resource is that it's really kind of hard and uneconomical to drill so deep given the location, and you'll be adding value in year 10, 11, 12, which when you discount it doesn't really give you much in today's economics. So but nevertheless, there is very clear indication, and we've proven that there is a lot more ounces very likely in the project than we currently have. What's very unique about it is the fact that within our current feasibility study, we've also included about 5,000 tons of antimony metal that's being mined alongside gold. And this all included in terms of cost comes together with gold. But the current FS does not have any economics for antimony revenue. And the reason for that was simple. We didn't have enough flotation work and work to be able to justify revenue. But we're fixing that. We've announced recently, a couple months ago, some really good initial flotation results where we can produce a very high grade antimony concentrate running up to almost 60% antimony and 100 grams gold. So we will be looking over the course of this year into next year to update the economics to include antimony from revenue. Why it's important is because this is pure profit, more or less. The cost mining it is already covered, and the cost of flotation and why not is very minimal. So anything we would get on top would be very significant with the even already great economics. So we are very excited about it. And, we may be possibly looking for even more antimony, more gold, meaning even during the course of this year, because as we go through permitting, we believe that we could possibly add even more value to the current mine plan, so make it even more robust. Now, this is from a technical perspective. Of course, people want to see, can this be a mine? And there's really two things there. One, can you permit? And which is very important. And in British Columbia, also, can you work and can you really create a true partnership with the First Nations? And we are very fortunate to have made really good progress on both of those. We've been in the permitting process in BC for about 3 years now. We expect to file the environmental assessment application within the next few months. And on the First Nation side, we are very fortunate to have built a very solid relationship with the Taku River Tlingit First Nation, which is it's an excellent nation. We've established a technical working group with them and a formal way of working with them almost 3 years ago, and we are working towards culmination of consent from them. But I think very importantly, what we are trying to do with TRTFN is we are trying to showcase an example where you can have a win-win partnership between First Nations and mining companies, and trying to create legacies for the community. So it's a very unique opportunity that allows us to create something spectacular. And there's not much to disclose on that because it's in works. But I'm very confident the moment we're gonna have it all wrapped up, it's gonna be really good news for shareholders and for everybody.
Mm-hmm.
So yeah, that's in a nutshell, the company and what it's all about. And I think as we move from the current valuation into milestones, the share appreciation should follow, but not because the market is moving, it's because we're gonna get things done.
Yep.
If the market is moving overall, helps, of course, but I think on our perspective, we are focused on on actions.
Yep. Yep. Absolutely. Well, no, I appreciate that overview, and you touched on a lot of the points that I wanted to get to with my questions, but I do have a couple to sort of build on there. Firstly, the asset itself. So this was a historical underground mine. Can you just touch on that past production,
Yeah.
and then where does the continuation of the geology go? Where is the mine plan in relation to those previous underground workings?
Very good question. I think this was a historical mine. The mine produced up in the 1950s, roughly about 250,000 ounces of gold. Funny enough, it's similar grades, 10 grams per ton. So, that validates, our current resource. If you look geographically, this is an underground mine. The first 150 meters from surface thereabouts have been mined in the historical times. Everything we have delineated and planning to mine is under the existing old workings, which is great because there's been many cases where companies go after the old workings and they realize that it's not there what they were
Yep.
supposed to find. In this case, nobody's touched it; it's brand new. So the Canagold has actually spent over the last 30 years in excess of $100 million defining the resource and getting to this stage. And it's all unmined and undeveloped, and the ore body continues at depth, but because of the location of the project, we are now down to about 600 meters thereabouts, that mining, but this type of deposits could go down to about 2000 meters, and we do have a few deep intercepts that prove that, but we have nothing beyond that. The additional drilling to prove more ounces will be done once the mine is developed and you are underground and you can, you
Yep.
know, effectively drill more.
Yeah. And so that's what I was going to ask in terms of exploration. Right now, there's little to no exploration going on site. Is there anything planned in the near term, or is it just all, like you said, deep drilling once you actually get underground?
Yeah, yes, it is. We do have some plans to drill more, because one, um, add more antimony, to be honest with you, because it's such a creative thing to do, and whatever we delineated so far, we never intended to look for antimony. This was
Right.
part of the exercise where we have the assay in hand, and this is what we had, but we never looked for it. So there is indication there's a lot more antimony in the system than we already have. So and a lot more gold too. So we are contemplating a possible drilling campaign even this year. We'll be making an announcement once a decision will be made. At this stage is tentative. Um,
Right.
but definitely, we 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 can do a lot more exploration. But again, see the way we look at it, Ben, we want to add to the bottom line, right? Where right now we have a mine, we're building a mine. We want the exploration that improves the economics
Yeah.
or extends the mine life, but ideally improve the current economics. So the initial focus of the current exploration would be the current mine plan. Can we make it more robust? Can we add more ounces? Can we add more ounces of gold and more tons of antimony? So that's the focus. Once you are underground, you can drill for more, which would possibly extend the mine life beyond the 10 years, thereabouts 11, 12, 13, 14, 15, and thereabouts, right? So that's kind of the focus we have right now between now and production to add something that could be included in the current economics.
Right. Right. Yeah, and I guess that makes sense, right? Focus on the low-hanging fruit, not your 11 or 12 or whatever of the mine life that will have pretty minimal impacts on today's, MPV and NPV of the project. Um,
Yes.
on the antimony, so you did touch on it. Just to clarify, there are no um, uh, antimony revenues coming within the economics of the current feasibility study. So the
Correct.
plan is to do metallurgical test work, which it already sounds like you've well advanced, and then with the goal of updating the feasibility study and including those economics within there. What can investors sort of look for over the next, let's say, 6-12 months, on the antimony side that would be sort of that, okay, this is the news that we were hoping for with antimony, and now they're going to start working on the feasibility study. What is it that we're waiting for?
Yeah. So I think two things. One, which is important, I think, a decision on drilling for more antimony. It's always great, to be honest with you, to prove that we have a lot more than what we thought we do. In a world where, we are in a very, hot gold environment and generally critical metals environment, being able to drill and have results and have new intercepts, that generally is positive for investors. That's one. And the second would be additional work we're doing on metallurgy, so as it becomes available, to validate the initial positive recovery and ability to produce concentrate and why not. So we'll be doing more of that, and we'll have be more news releases on that as well. So will be a combination of, if we decide to drilling results and more technical results on antimony.
Mhm.
Um,
And then I guess that leads to, potentially updated feasibility study. Are you working on any sort of other optimizations besides antimony that could
yes,
be improved between now and then?
yes. So the current feasibility study, again, given location, it's the power generation is 100% based on diesel generation, because there's really no power line and reality no ability to run one economically. Um, so it's based on diesel and still has very decent, very great economics actually. But we have identified, and I think we're talking about it also on our news releases in our feasibility study, the ability to generate clean energy, run of river type of energy, so hydro, but run of river, no big dam, just run of river.
Mm-hmm.
Um, Location, has a few options for that, and we've identified one that's very suitable, which does have the potential to generate on an annualized uh, basis about half of the power needs. So,
Right.
we've been working on that. It's not something new. We've been working on that for the last 2 years and we'll continue work on it. There's also a perfect partnership with the First Nation, for example, where in theory they could build it, they
Right.
could have it then, and then we buy the power of them. That would have a dramatic impact on the economics. Of course, hydro is a lot cheaper than diesel is, and also from an environmental perspective, we want to really showcase a clean project there. So um, there is a possibility that an updated FS would include, more additional details on the hydro. So we're working on that also. So, and then so it's really, if you look at it on an update of FS, it's really three things: antimony, quantify the revenue, how much money are we talking about? Two, the possibility to add more ounces of gold, because when we drill for antimony, gold is there too,
Mm-hmm.
so we capture that too. And three, clean energy, right? So those are kind of the big things we're working on. In terms of timing, when we're gonna do it, um, we want to do it right. So I'm not putting a timeline to it, whether it'll be this year or early next year. We just want to make sure it's done right. And there is a reason for that. Canagold wants to build this mine. Why? Because
Yeah.
Sun Valley operates and owns mines, and we are operators. So we're not just looking to flip the project, right? We want to build it. So everything we do is solid. It's aimed to be able to execute and have a profitable project.
Yep. Yep. I'm glad you mentioned that because, like you said, there are a lot of companies out there and management teams out there that are looking to sell long before that construction decision. And from an investment standpoint, there's certain risks associated with that. Um, so, in terms of the location itself, you mentioned fairly remote, no major roads going in and out of sight, and that brings in sort of a unique mine plan that you guys have with this operation, and that is flying in and out flying out the concentrate to another location. Can you sort of touch on that,
Yeah.
the strategy behind it, how you can afford it? Where is the concentrate going, and the whole sort of mine plan there.
Yeah, absolutely. So, very good question, man. And really, if you look at the mine will produce a very high grade gold antimony concentrate, right? We're talking about 138 grams gold, and then the antimony would be separate. So it's very high value product. And we're talking about the extent of about 80 to 90 tons a day of concentrate, right? And being such a high value item, the cost of flying, which is not inexpensive, it's published in our feasibility study, it's $1,000 a ton. We can afford it, right? Because you're flying something high value. And there is a reason why, the flying of concentrate makes a lot of sense for our project. One is the proximity to Juneau Airport. Juneau Airport, which is in Alaska, sits within 60 kilometers from the project, very close. And Juneau is a full-fledged international airport and able to handle our concentrate. And we've been in discussions with Juneau Airport Authority. We looking at a piece of land that we'll be securing on the Juneau tarmac. So we are quite advanced on those discussions, and we've been talking with U.S. Customs Patrol and the logistics around how you're gonna fly and export to concentrate and send it off. So we covered all those bases. Now, keep in mind that as soon as you bring your plane with concentrate to Juneau, you have an empty plane in Juneau. So now you're loaded with mine supply. So there is significant savings to be had for flying now your supplies, because effectively your flight is paid for by the concentrate. So when you put everything in the economics, you still have very solid economics. So the idea of flying concentrate is very rare, I guess. People say, "What? Can you fly concentrate?" And generally, you cannot, because it's not enough value, and generally you fly long distances. In our case, it's super high value and it's very short distance, right? So as a result of that, we've removed the need for barging during the course of the operation. Essentially, removed it. We may still need to barge every seldomly for a big piece of equipment once or twice a year if need be. So there is the ability to barge to the project seasonally to build it during the course of a year and a half to 2 years.
Mm-hmm.
Once the project is built, then we made a commitment to the First Nation and the community that we will not support the operation through barging. And this when the air came in. The project has actually evolved significantly from its original plans as a result of consultations with indigenous people and the communities around. So, when we started 3 years ago, we were planning to produce physical gold on site, cyanide, barging. Based on feedback, we don't like cyanide, barging is a no-go. We've re-engineered the entire project and made it as simple as possible, which is today, and still it's a very economical project.
Mm-hmm. Well, and I think, from an environmental standpoint as well, you're not driving a big road through the mountains, 50, 100 kilometers, however long it would need to be. And there's lots of benefits for the First Nations there as well as the environment. So I think that's also,
Yeah,
something that was considered and should be considered going forward. Um, so no,
absolutely.
appreciate that clarity there. And I guess that was going to bring me to my next question, which um, can you just refresh us, and I know you mentioned this earlier, but on the status of the permitting process and then as well the community relations, both of which, what can investors look forward to over the next, 6, 12 months that would be key sort of catalysts for the project
Yeah,
advancing?
absolutely. So I think that's a good thing to maybe to wrap up with. From a permitting perspective, we've been in the permitting process in BC for the environmental assessment for about 3 years now. We expect that within the next 3 to 6 months, I would say, we'll be filing for the environmental assessment certificate, which is a very important milestone because culminates 3 year work to get us there. What it does then triggers a 12-month process, a regulated process of engagements and back and forth with regulators and the communities. And that's at the end of that process, you'd get your environmental assessment certificate, right? So if you look forward to what it means filing for the EA within Q1, Q2, and getting your certificate in hand within Q1, Q2 next year, right? A big significant effort in that process is getting your consent from the First Nations. which is, again, something we've been working on for years and will continue to work on. And the consent is expected, before you get your environment assessment certificate. So probably at some point late this year or until early next year. Now, of course, you cannot build a mine with an EA. You have to get your mine permits. So what we are doing to fast track that, as soon as the EA is filed, a few months later, we also want to file all our mine application permits. We're already working on those in parallel to the EA, in the view that as soon as you have your EA issued, hopefully early next year, mid next year, by the end of next year, you also have your mine permits, which would allow us to start construction in 2028.
Right.
So really, those are critical milestones, and this is what we are working on right now. And as a result of that, yes, there are gonna be news flows on antimony drilling, maybe some permitting process, but this is also a time where there is not too much news,
Yep.
because those things take time. But I think there will be news flow, as I mentioned. If we decide to drill, there's been news there. There will be news in the progress with permitting. So I still think investors should expect a decent news flow from the company.
Mm-hmm. Mm-hmm. Well, no, I'm glad you mentioned that, and the story, in my view, is set up to, hold the stock, understand the thesis, and believe in that thesis for the long term. And with gold being at 40, I think 850 or whatever it is this morning, um, you know, you are a company, and Canagold is a company that is actually going to be able to take part in these elevated gold prices. An exploration company or an early development story, gold could come back down and they've missed this wave. Whereas Canagold and these handful of companies that are in the late stages of development will actually be able to take part. So I think that's a key sort of differentiator for you guys. And I have these numbers in front of me from a risk standpoint. The initial capex is only 250 million Canadian.
Yeah.
Very low for a close to 100,000 ounce producer. You're seeing that close to a billion for some assets. And then of course the leverage to gold. We talked about the base case in your feasibility study being 2,500 US. Gold's almost double that today. I think we had at spot prices the NPV was over a billion. IRR well above 50%, probably closer to 70 at spot prices today. So lots of leverage to the gold price. And again, you're only a couple years away from a construction decision. Um, the last thing I wanted to sort of mention was from a risk standpoint. So you mentioned Sun Valley and your
Yeah.
relationship with them being a 50% holder in the company. They've been supportive over the last few years from an investment standpoint to help push this project along. Going forward, how can Sun Valley support Canagold, both from possibly a capex financing support perspective, as well as even the concentrate? I understand they have a fully integrated system within the company, and there's potential there from a
Yeah.
processing the concentrate perspective.
Yeah, I agree. But it's a very good question, and I think it's a good overview. I would add to the things you mentioned the fact that, again, Sam Valley owns 50% of the company, puts us in a different category altogether. Because effectively, an investor that invests alongside Sam Valley and then look at Sam Valley's track record, they made a lot of money for shareholders. Like I give you an example, Mineros, it's a company that Sam Valley owns. They own 68% or 66% of it. So 1.4 billion, I think, US market cap. Um, they started investing, the stock was, under $1 and now it's almost $6 Canadian. So that tells you that they are smart investors and you come in alongside them, right? And a very unique opportunity because you also have the cornerstone investor that ensures the company executes. And even if it's a pullback in gold prices, they are there. They will get it done. And the project can afford even much lower gold prices than today's.
Yep.
So I think very good opportunity for investors from that perspective. In terms of Sun Valley expertise and commitment, Absolutely. Like when it comes to building the project, let's use a $250 million capex. There'll be an equity portion required for building a project. You know, if you use 70-30 debt to equity ratio, which is very normal for this type of projects, that means we would have to raise, 30% of 250 million. Can Sun Valley put up half of that? No problem. They are a $1 billion plus group and they are 100% private. So again, we have the leverage that time to finance, here is your equity capital already paid for half of it, right? So you go with a big lead order and you just get the rest done. Can they finance everything? Sure. Will they want to? I don't know. But those are good options to have, right? Um, so I think, we are very eager to get to that point to be able to write those checks and get building done. So we feel very good about the ability to do
Hmm.
to do that.
Mm-hmm. Absolutely. And I think I like to look at these things from a risk perspective. And we didn't really touch on it, but the size of the mill is smaller because of the high grade nature. You're still reaching that sort of 100,000 ounce per year mark, but you're processing,
A bunch
10%
of
of what a 1 gram operation looks like. So from a when I say de-risked standpoint, you have the bankable FS already out, potentially upgrading that with improved economics. Construction capex and financing, we just touched on that, relatively de-risked compared to peers, also because the capex is so low. And then from an environmental and First Nations relations standpoint, again, small footprint, flying the concentrate out so you're not building a long road, underground operation as well. So for sound and footprint, it's quite small. So all of those things work towards, is this a product that will be built one day? And I think we can agree that it's more likely than maybe a larger open pit in northern BC. So with that, Catalin, appreciate the time today. I think we've touched on a lot of good points, and I hope investors have enjoyed the discussion. Certainly looking forward to follow along over the next year and 2 and 3 as this project continues to develop, as well as the few catalysts between now and then. And for our followers, if you haven't seen our research on Canagold, you can find it on our website at atriumresearch.ca. And Catalin, again, thanks for your time today.
Thank you and great to be talking to you, Ben.
Me as well. Thank you.